think I've got about 5 minutes left for the talk now. Thanks, people, for coming. So the first talk was really about, having found stuff and got to feasibility stage. The second one was about finding stuff. And this one is about promising to find stuff. I guess S2 and its precursor Sirius and the same team through Lion Ore and a few other companies have been together for 20, 30 years now. And exploration is what we do. And that's a little quote by T.S. Eliot, which pretty well sums it up, really. When everyone thinks everything's been found, you go back to square one and you open your eyes and find something different. That's just the usual cautionary statement. What S2 does is hunt for hidden elephants. And we're fortunate in that because of our track record, we've got a bunch of shareholders who allow us to do that. They give us the time and show us the patience to do what you need to do to put in the legwork, which takes many years to find an overnight success. So this is what we do. Essentially, this is what we do. We look for big things to create value. If they're good, we develop them, a bit like Nova with Sirius. If they're not, then we're not afraid to walk, and we like to preferably monetize those to fund our exploration for the ongoing search for the big one, or maybe sometimes keep a slice of a pie at no or low cost to be exposed to the upside that somebody else is paying for. So that stops us getting cornered. It stops us falling in love with things and persisting with things that we just need to move on and avoid falling into the trap of it being an opportunity cost. It also means, it lessens the need for new equity, so it minimises dilution to existing shareholders. And that's why they give us the long leash to do what we do. You'll see later on who some of those big guys are. But basically they say, as long as you manage your money well and you're surviving and you're swinging the bat and having shots and not diluting us to buggery, then we'll keep on supporting you, which is a great place to be. So these are the things we've various team members have found in the past. A gold mine in Burkina Faso, the Thunderbox gold mine that was is with Northern Star, Waterloo nickel mine, Lounge Lizard nickel mine south of Flying Fox, the Nova Bollinger nickel copper mine, a small one, Baloo, near Norseman, and the most recent thing is a sort of emerging gold prospect next door to the Kittilä gold mine in Finland, owned by Agnico Eagle, which is Europe's biggest. Their mine is Europe's biggest gold mine, and we've got an interesting looking prospect right next door to it. If they don't make the grade, then we off them, and these are things we've offed. So we sold Baloo to Westgold for 9 mil. We've carved off some finished ground in a joint venture with Kinross, who are spending best part of 10 mil US on that to earn 70%. Similarly with Rupert Resources, a TSXV listed junior, they're earning into another little slice of that pie for 3.5 mil euro. We've sold some small little tenements to another Canadian junior, some applications to Kinross. We've recently vended in a couple of our WA exploration plays into an unlisted company called Pacific State Metals, which aims to list in the middle of next year, and we've got about 30% of that. And there's a few other things we're looking at doing as well, and it's really to stop ourselves being too widely spread and focus on 3 things we think are the big ones in the making. Just briefly, corporately, there's a 5-year and a 6-month share price chart there. We sort of, first of all, I guess our shareholders, you'll see Mark Creasy has 16%, Jupiter Asset Management from London, nearly 15, Paradise from Sydney, 7 and a bit, and a few other instos in there. So between those guys and the insiders, we've got about half of the company sewn up. Really, those guys are very patient. They made a lot of money from Sirius. They're not in it for doubling or tripling their money. They're in it for 5, 10, 20 baggers. So again, it gives us a great opportunity to do stuff that a lot of juniors can't when they're constantly managing their own shareholders. Got a bit of cash, 6 mil, a couple of investments worth a couple between them. That share price chart really shows that we sort of got a base level, and then when there's an event, there's a bit of betting on the outcome of it. The first event there is gold drilling in Finland. The second is when we drilled a couple of conductors in Fraser Range. The third sort of leg up there is when we were awarded the Fosterville tenement, which was highly sought after, and I'll spend most of the time talking about. And the fourth one, most recently, is doing the first ever deal with the traditional owners in the Fosterville area, which will enable the Victorian government to eventually grant our exploration licence, I think. So three sort of stories. I've sort of uncorporatised them, if you like, because it's getting on a bit. So once upon a time in Western Australia, and it's a then and now thing, if you like. The team, when we were with Lionel, we discovered Thunderbox, and that is the photo that Graham referred to, and I think Kerry used in her gold conference intro the other week. That is the Thunderbox there, with Will Dix sitting on it, looking at his magnetic interpretation. So we found that. A couple of companies looked at that. Normandy Mining called it a 2-gram graveyard because they didn't appreciate that it was 80 metres thick from pretty well close to surface with a nice supergene-enriched zone on top. And thanks to that, it had a 9-month payback, even when gold was $375 an ounce. So that was found by looking in an improbable place just a kilometre from the Goldfields Highway with no geochem response, no geophysical response. And we put in a couple of air core lines across it, two lines, 40 holes. The last 2 holes on the line didn't get drilled because there was a creek in flood. So drilling 38 out of 40 holes, you'd think, okay, that's job done, forget about the rest, but we didn't. And the last sample in the last hole was the discovery hole for Thunderbox. It's a big deposit, not as big now because it's been mined for quite a while. But it was undercover with very little signature. So how that relates to now is we've identified a similar zone north of Simon's Ground, actually, north of Big Bell. It's a 30-kilometre long shear zone that's undercover, not being explored, a long strike from Big Bell. It's under application at the moment. It's been sitting there for 18 months waiting for heritage agreements to get sorted, and that's a recurring theme with all of our things. We've been fairly quiet for a couple of years because of sorting all of these agreements out, and we don't really say much when there's not much to say, so this is my first outing in that time, really. But when that heritage agreement is sorted and the ground gets granted, we'll be straight onto it doing a big air core program like we did back at Thunderbox, and that's just, in a simplistic sense, the similarities. That's looking at a regional scale at aeromagnetic images. The one on the right shows Thunderbox at the south end of a north-northeast trending bend in the shear zone, bronze wings up the top, and then sort of parallel to that over to the west is the same sort of thing with the Agnew Lawlers gold mines and Bellevue sitting in it. And on the left-hand side is the Meekatharra district with all the sort of Meeka line mines on the right-hand side. Big Bell down to the south and the same structure ripping through our ground. It doesn't look particularly sort of big at that scale, but that little yellow oval is about 35 k's strike length on our ground that's just waiting to be drilled when we can get on it. So that was once upon a time in WA. This is once upon a time in WA and New South Wales. So the same team, as Sirius, found Nova. We took it from a $7 million company to $1.8 billion. Part of that deal being taken over by IGO was to spawn S2. And fast forward probably 10 years, and we found a big bit of unloved ground in New South Wales, about 2 hours drive north of Broken Hill, straddling the Silver City Highway, either side of the Pack Saddle pub. And that's the ground that had been looked at by Inco Vale a few years back. They'd done some regional airborne mags and EM, and in the big company fashion had walked pretty well straight away after that without doing a lot of work on the ground. And that's exactly what had happened in the Forestania belt prior to us finding Nova as well. We Inco Vale had been there before us and done exactly the same thing, so we consider that a good thing. And we got the benefit of all that data as well. The ground was open. There are a couple of reports from those days of nickel copper sulfides in outcrop and in drill core of the few holes that they did drill. So we've got an area that looks a dead ringer for the area that contained Nova. And this slide here, the diagram on the right-hand side, is sort of the central southern chunk of the Australian continent, if you like. So the South Australian, West Australian border goes pretty well down the middle there. The Fraser zone, which Nova was found in, is a sort of mobile zone that wraps around the Yilgarn Craton. And the Coonenberry belt is exactly the same, and it wraps around the Curnamona Craton at Broken Hill. They're almost like a mirror image of one another. They're not exactly the same age, but that doesn't really matter. But where they are really similar is, if you look in those two pickies down on the bottom left there, the thing that marks out the nickel fertile part of the Fraser Range is the big linear gravity anomaly, which represents a big chunk of dense crust that was thrust up and brought those deposits to the surface. And you get a similar thing at Coonenberry as well, which is the right-hand side of the two smaller images there. So you've got a big dense chunk of crust thrust up against the margin of the Curnamona Craton. That's that gravity anomaly in detail on the right-hand side. And then if you look at the magnetics on the left, you've got a lot of long, skinny, stringy features, and they're all sills, intrusive sills, which is where you find these things. So we've got exactly the same ingredients at a broad scale as we had in the Fraser Range. And the ground was open, so we pegged it, and we got 140 kilometre strike length of a blank canvas, really, to start on. So that's those tenements, by the way, at Coonenberry were granted a couple of weeks back, so we're actually going to start doing something there at last. So there will be news flow starting from there. And then once upon a time in Victoria, a number of you will be aware there was a tired old gold mine called Fosterville that nobody wanted until they found a bonanza zone which was roughly 2.5 million ounces at 50 grams. And it became the flavour of the month. Every man and his dog wanted it. Kirkland Lake from Canada bought the mine, and they spent a lot of money around the mine trying to convince the government to let them hold on to that extra ground for longer than it would normally be able to. So they spent probably $20 to $30 million acquiring all sorts of stuff. And then the Victorian government said, well, thanks, guys, sorry, but your tenement's expired. They put it into a moratorium. They divided it up into 4 blocks. And Kirkland Lake put in a proposal to get that back. And in their relinquishment report, they say virtually word for word that, we will definitely be getting this back, and we'll be continuing to follow up the drill hits we've had in this work. But then when the tender happened, every man and his dog put in bids for it. There were 4 blocks. Block 4 was the gem around the mine. We put in bids for 3 of them. Didn't think we'd even have a chance. We know that other companies, including the big boys, were putting in bids of up to $65 million for Block 4, which is the key one, and we won it with a $10 million bid. And in parallel with this, Kirkland was being taken over by Agnico Eagle of Canada, a $30 billion company. So by the time that deal completed, they'd got the mine, but they'd lost all the ground around it, and we had it. Now, that's been in process of getting granted for a long time now, and we're very hopeful that it's very imminent. So once we do get on the ground, we'll hit the ground running for a bunch of reasons I'll show you. And that's also the photo that Graham referred to there. That's me standing on the tenement boundary, and that's Agnico Eagle's gold mine. That's been producing 600,000 ounces a year at about $500 an ounce cost. I sort of stood there for a while until the security came out and told me to bugger off. And I very politely told them that they're actually standing on our ground now. So the background to this is it's east of Bendigo. Those 4 blocks on the left-hand diagram you see were the 4 blocks in the tender process. The blow-up of that diagram on the right-hand side shows block 4, which we ended up getting. And the red rectangle in the middle is Agnico's mine lease. So we absolutely surround them. And they're, you know, as they continue to mine, they get closer to the border. And even by doing nothing, we feel the value is going up. Importantly, we inherited all that data. We inherited probably $30 million worth of geochemistry, gravity, magnetics, electromagnetics, induced polarization, seismics, their drilling database, and the actual core. So they'd gone hell for leather drilling this stuff, maybe in the hope that they might find something and get a retention license, which would allow them to keep the ground, but they just didn't get there in time. So we've inherited, 20 or 30 prospects that they'd defined. Some of them aren't only drill ready, some of them already have drill holes in them, and I'll show you some of the hits in a minute. So we can just basically walk up to them and start where they left off. And there are other things like this IP data here. They ran IP over their known deposits to see if it was a good vector for finding the mineralisation, and you can see on those 2 lines down the bottom there, it works. It lights up things over the Harrier Zone, the Swan Zone, and so on, and up at Robbins Hill as well. And there are a few other areas where it's lighting things up which are now on our ground. But the coverage isn't that great on our ground, so we'll extend this thing as another means of sort of focusing in on prospects outside of the ones that are already drill ready. And there are prospects like this. This is a sort of view looking from above to the southwest. So you're looking at the surface. The pink area there is Agnico's mining lease and their deposits within it. Everything outside of that pink area is ours. And for example, up at Gornong, where we've got that arrow plunging down, we've got hits like 20 metres at 6 grams to follow up, drilled courtesy of Kirkland Lake. And a kilometre down plunge from that is where the next hole is, and that's 3 metres at just under 8 grams there. So it's really a no-brainer from an exploration point of view. So our aim here is to go in there, get drilling instantly, and start hopefully chasing these trends and extending them, whilst we're in parallel with that sort of doing more of the broad brush stuff. So that's our plan A. It's overlaying... Sorry, I'll just go back. I'll just skip over that. That's just the geology. We've got sort of well-known geological models to go on courtesy of the mine as well. Yeah, that's disappeared from here. But what I'm going to say is the interesting thing about this is we're at Fosterville to find some serious high-grade gold. But we're right next door to a $30 billion company. Our market cap is 0.6% of theirs. We're cramping their style seriously. We're also next door neighbours to them in Finland. So we're probably pretty annoying. When the tender process played out, we won the key block for $10 million. They put in bids for the 3 other blocks for $30 million each, and they won those. So they've ended up with the 3 consolation prizes, and once they become exploration licenses, that bid becomes a liability, an expenditure liability. So they're stuck with, if they get those granted, having to spend $90 million on what they don't want, which is 50% more than our entire market cap. So that could make an interesting situation in its own right, and I'll leave it at that. Thanks.